I will say since the March regional banking panic here in the US, there has certainly become a greater store of value bid in the Bitcoin asset class than I think it had previously before. I don't know that we can say what percentage of Bitcoin's price change, price fluctuations are being driven by store of value versus risk appetite, global liquidity, et cetera. But I certainly think that whatever that pie chart looked like in terms of global liquidity, global risk appetite, global sort of store of value, I think the pie slice associated with the store of value has certainly increased in recent months. And part of the reason we're seeing that is because, we have various metrics that kind of track whether or not, is liquidity improving, is, risk appetite improving vis-a-vis sector and style factor dispersion in the equity market. We can certainly look at the bond market, whether it be yield curves or forward spreads or et cetera, to give us an idea, okay, is growth expectations rising, or people wanting to take more risk and want to speculate more? And the reality is we've not seen all those traditional drivers of the Bitcoin price really improve. In fact, I would argue we've seen them actually deteriorate in recent months. Obviously, this negative inflection in global liquidity from kind of the January, February highs of those time series has actually gotten worse. We've seen, degradation in fixed income curves and money market curves. We have this really nasty record inversion in the 1 month T-bill minus the 3 month T-bill is signaling a lot of stress in the collateral system, in the repo system, in the repo market. So I would argue global risk appetite has not really improved either, alongside global liquidity. Global liquidity is down, risk appetite at best is flat, but we've seen the Bitcoin price rally pretty sharply off the March lows of the March lows of 2023. And in our opinion, I think it's got to be some deposit flow. Instead of saying, hey, just give me an Uncle Sam piece of paper, a money market T-bill fund, let me put some of this in a digital asset like Bitcoin as a longer term store of value. And it's no surprise to me that this is happening given the deposit situation at Silicon Valley Bank, right? Signature Bank. These are institutions, these are companies and people and individuals and founders who believe in these assets from a longer term perspective. So I think they came to a fork in the road and said, well, if my depository institution is going bust, where do I put all this money? I can put some of it in T-bills, but I can also put some of it in something like Bitcoin.